Good evening, ladies and gentlemen. It is Monday evening, time for Crypto Talk, and we are looking forward to host you tonight. And I've got the whole team, everybody that's the usual bunch are here. There's no one in Kruger like Marius in the last freaking month. We are all here. It's a privilege to serve you on a Monday evening, and tonight we have an exciting angle onto where we are with regards to crypto, and I look forward to share that with you. And Jason will help us and assist us with the charts. And then we will look at Ethereum, where Ethereum is at. And I will start with comparison with the Bitcoin halvings and see if we can make anything out of that with regards to Ethereum, because we in this anticipation towards the Ethereum merge. So I will look at the Bitcoin halvings and see if we can pull it through to the Ethereum merge, if we can see some information with regards to that. And we'll look at Ethereum, we'll look at some points of the merge, and we'll go to FibSmith, and we'll get a Fibonacci drawn somewhere from Andre. Marius will tell us what he's busy learning. He told me earlier today that he's very excited about the crypto trading workshop that he's busy doing. But tonight it's everything about Bitcoin halving history versus Ethereum Mainnet merge. And that is what we're going to be about tonight. And I look forward to share my little 5 cents worth with regards to that with you, and to get that onto the screen. But first I have to page past all that to get to our subject matter expert. And without further ado, let's go over to our subject matter expert at the Crypto School, the subject matter expert on crypto trading, none other than our own Jason Ashington. Jason, please do us a summary with regards to what's happening in the crypto market at the moment, buddy.
Good evening, everybody. Yeah, it really is looking like a bit of a roller coaster at the moment. Last week, this time, we were at $24,000, just over $24,000. And tonight we're sitting at 21,000. So we have dropped about 13% in the last 7 days. And for those people that are trading, we have really got traders' dream, because traders love volatility, where they can buy low, sell high, buy low, sell high. And at the moment, it's looking like that. So we've been in this rising channel now since the 17th of June. And from the 13th of July, we were in a rising sort of wedge formation that we broke to the downside on, when was that? That was on Wednesday last week. And you can see how we have dropped all the way down to the bottom here. We have found support at the 20,757 level. You can see there some candles have come down and tested that to the bottom there. But what is really concerning me in the last 6 hours is that we have the drivers of the stock market. And remember that the crypto market follows the US stock market. And what drives the stock market is the strength of the dollar. A dollar that is strengthening is very bad for the markets. A dollar that's weakening is very good for the markets. And a 10-year yield that is also has gone up in the last sort of 3-4 sessions. Now the DXY is spiking up here, which is concerning me a lot. This morning we were down at the bottom here around about 106. And what is, yeah, sorry, apologies, about 108. And you can see in the last sort of 8 hours or so, we started pushing up this one green candle here, and we've gone back into this yellow channel again. We are at a bit of a resistance here at the moment. This resistance level is actually a bit bigger than this. It actually goes right up to 110. And how do I know that at 110? We need to go back in history and on the monthly charts, go right back to 2001. 110 there was some resistance, on resistance here, 1986. and 1982. So we have to unfortunately go right back into those times to see what happened here. So it was resistance in 2002, it was support in 2001, and resistance in 2000. So we're fast approaching that same number, around about 109 to 110 resistance. So we want to see it get rejected in this level, but the way it's moved up today especially is a bit concerning. If we look for some indication from the RSI to see if we see anything there, we can see that we've got a bit of bearish divergence that is playing out, especially if we go back in a bit of time here. We can see on the 28th of April, the RSI was very high, and yet price at that time was lower than what it is today. And if we look where we are now, compared to the 14th of July, the RSI is a bit higher than what it is today. So we do have a bit of bearish divergence, but if price carries on going up, that can actually negate that bearish divergence. So we want to see a rejection in this area. We want to see it start trending down. That would obviously be a bit more bullish for the markets. And then the 10-year yield has also started moving up over the last week and a half, and we are actually in resistance at the moment, a major resistance area, but the 10-year yield also needs to start coming down. Now, the last time it started moving up here was in the middle of June or so, and at that time the ECB and the Fed started printing, and they got this 10-year yield to start coming back down again. They got it into control. Now it's spiking up again. So we're hoping that the printing presses can start pushing this down and get it under control. And that has resulted in the S&P really starting to come down in the last few sessions here. We can see we hit a target here on the 16th. That was last week, Tuesday. And from there, we're trending down. We are in an area where we are very close to support. You can see where this area here in June and also in May, this area here is strong support, and we're hoping that this will act as support again. And we should hopefully get some sort of reversal of this area where we are currently in. But that Dixie and the 10-year yields need to stabilize and start moving down. But nonetheless, if we move over back to Bitcoin and we go into smaller time frames, we have been trending sideways for the last 3 days. We are trending sideways, going up and down. We tried to push up yesterday. It was yesterday, yes. We hit that resistance point again of 21,800, and this red block here, you can see it is a bit of resistance. If we go back and look, it was actually a support here, support, resistance here in July. This area is resistance now on the way up, and we need to get through this resistance area. But there is liquidity. If we look to the top here, there is liquidity in a number of coins. Bitcoin, for example, there's a massive candle to the downside here on the 19th that hasn't been retested back to the upside. And we've also got this 200 moving average above here, 23. So I would imagine that possibly later on this week, we are going to start trending up. We need to get through, as I say, this area here. And I would imagine us going up to this 22,600 and capture this liquidity there, and maybe getting rejected again at 22,600 on Bitcoin. If we move over to the second biggest coin, Ethereum, and we go into smaller time frames, you can see we've also got liquidity candles here. Yeah, same date, 8 o'clock. There's a candle that hasn't been tested to the upside here, and that is between 1750 and 1815. So same with Ethereum. I imagine us possibly going up and retesting that. We've also got a break to the downside out of this rising wedge that comes also pretty much like Bitcoin does from June. And that area would also have to possibly get retested. The break to the downside would have to be retested. So I expect us later in the week, hopefully start moving up here and retest these areas here. If we go and have a look at total market cap, we can see that the total market cap has come down and it's found support on this orange line that comes from March 2020 and the COVID drop. And that orange line touched again in September 2020. And you can see it's acting as support at the moment. We did spike down on Saturday, and we hit this other support here of 962 billion. And you can see that area was resistance here in July, where we tried to go through that 962 on a few occasions. So it's acting as now support now on the total market cap. Total 2, which excludes Bitcoin, we've got a support here at 565. That's still holding. And total 3, 380 is holding up nicely. So I think crypto has pretty much come down. It's stabilized. It seems to be trending sideways for now. It's just really the stock markets that we want to see, the S&P, the Dow Jones, to all come down to a support area, find support there, and then hopefully start moving up. What else do I need to show you here? So I've gone through 10-year yield. I've gone through the Dixie, Dow Jones. The one thing that we need to look at is the commodities. And if we go back and have a look here, commodities, the oil spiked up when the announcement of the war between Russia and Ukraine. And we went right up to 135. We came down, we hit complacency at $125. And from there, we started pushing down. The United States are doing the utmost to bring this oil price down. They want to get a positive sentiment in the United States before the elections in November. And they want to obviously start announcing that they as the government have managed to circumvent the inflation. They have gone to stagflation, they've gone to de-inflation, and they'll bring it down. I believe that they have even started tapping into their reserve oil that they use in times of crisis like war and that. They've even started tapping into that to bring down this oil price. And you can see the reflection in hedges against inflation. Silver is trending down. It's been trending down now for a while. So that's, and then gold also a similar picture, is trending down, hedges against inflation. So we've got stagflation, de-inflation in these commodities. And then foodstuffs are pretty much down to where they were in February. So if we look at these commodities, they are coming down, but the printing of dollars is still massively it's happening, and that inflation is definitely going to come back and bite us, possibly even next year. So then the next chart is the USDT. So USDT, if you focus on this yellow line here, we've had this daily yellow line that was acting as support. We broke to the downside here in the 28th of July. And we actually gone up, and now that yellow line that was support is now acting as resistance. So we want to see this USDT start trending it down again. I just want to have a look at the RSI here. I don't know if Fib Smith has seen any bearish divergence here, but you can see on the 8 hours really has topped out. Let's just go to, there could be a little bit, but yeah, so that's a one chart. And then the Bitcoin dominance on a higher time frame, we were in this falling wedge from June last year. We broke out here in May, and we've come down to retest this breakout on this orange line at the moment. And I think that we are possibly going to honor this orange line and trend down with it right down to that strong support line of around about 39.5 later on in the year. So up and down, all the way down. That's what I'm seeing there. Okay, let's just to have a look at crypto bubbles quickly. On the top 100, we've got one green candle. EOS of all coins, 33% up the week. Go to Binance. We've got a few greens coming through here. A lot of these coins you're not familiar with, but 192,
They are
150.
all the soccer clubs. Porto, Lazio, and Santos are
Okay.
all the soccer clubs in Europe.
Okay. How cool is that? And we got also a few greens coming through here. The one thing that I've noticed, and it's still very early days, is that it looks like some of the money is flowing into these majors. We take Litecoin, for example. This is a 4-hour chart. We've come off 53. I know it's still early days, but I'm just pointing out the green amongst the red here. We've come from 53 earlier this morning right up now to 56, where the other coins have mostly trended down. Bitcoin Cash, I saw, is also holding its ground. And then obviously EOS of all coins is actually spiking up. So I think some of the money is flowing out of Ethereum and going into some of these majors. So we need to keep an eye on these majors. Maybe put some alerts in here. Some coins like Dash, for example, they happen to spike up quite rapidly. If we go back in history here and just look at Dash, and we need to unfortunately go back before November, that we can see, for example, July to August last year, September trended up. And then if we go before that, 20 January right up to February. So keep an eye on coins like Dash. I've got an alert here already just to see what actually happens once we get close to this trend line and to see if it starts spiking up. So just keep an eye on some of this. And then Cardano is also in a falling channel, and that's a bullish falling channel. Only a 68% chance to break the upside. But also possibly put an alert here and just to see what it's going to possibly do if it starts breaking out of this channel formation. Okay, go back to FibSmith and we can come back to Ethereum.
Cool. Thank you, Jason. And yes, it's an absolute privilege to just sit and see the methodology and the thinking behind the coins that Jason is putting in to get us to where we need to go and where we should be with regards to our understanding of where we are in the marketplace. And Jason, thank you for always taking the time to prepare your charts and to make sure that you know exactly what's happening to be able to come and talk to us. We appreciate that. But without further ado, you heard Jason telling me, not asking me or suggesting, telling me that we now need to go to FibSmith. So Andre, Jason has spoken. So it's your turn, buddy.
Thanks, Jason. Thanks for telling me to come on. Yeah, guys, I hope everyone is well. Hopefully my English is well tonight as well. Anyways, I see in the chat there, Stephen is telling me to bring some good news. So it depends on what is good news to you, but we'll go through that now. And while Jason was speaking, there's so many tools out there in the market that actually is really great and nice to know and to get ahead of whatever is going on. And like the crypto bubbles, CoinGecko is amazing. And I just went there, and Stephen, you told about the fan tokens or the sports tokens. So here on CoinGecko, it's super easy. Like you can see obviously the top 10 and everybody knows about this. But I do this a lot. I go to the categories, and then there you can see the category listings and whatever. But then what I do is I go and filter it, sending it to 7 days. So there you can see the fan tokens. The 7-day average is 22% up. And then Harmony ecosystem, and I don't even know all of this stuff. And then you can go scroll through and just get ahead of what the market is saying. On 24 hours, meters, I don't know what that is, 39,000% up. Perpetuals, now I'm not really sure what that is, because usually that's like future tokens, but if you open that, it doesn't look like that. And you can even see it on the 1 hour. and you can see the sports is again above. So it's really nice to see that. And you can click on that and see what tokens is in there. So there you can see what tokens is in there. You can actually filter them, which one is doing the best. So I don't watch soccer, but I believe Santos did well, probably. I don't know. Is there like is the Sharks here and the Stormers? Can I short that coins?
No,
Which
sorry,
one, Kat?
buddy. We're not there yet. I understand that the Sharks is the first of our South African rugby guys to do a token, but I don't know how far they are.
Okay. Is it like, can you short that token? I'm just joking.
Hey, you can short the. What are you? Which team are you rooting for?
No, I'm not rooting. I'm a Blue Bull blood, so I'm not rooting.
Cool.
It is just me.
Okay, but because you're Blue
Anyways.
Bull, will not take the Mickey out of you.
Anyways. So yeah, this is really nice to get rid of the market, and I'll quickly just show. And I think Jason is using this website a lot. This is CoinMarketCal, and I'll just put this quickly in the chat. CoinMarketCal, and this is where you can see what is happening, what events is there in the market with what coins and stuff like that. Now, here you can see you can even add keywords there, the top 100 coins or top 300 coins, and filter it like that. So yeah, there's a lot of information that just can give you a small head start to what the market is doing.
You could put Ethereum in that block there, please. Yes, merge.
15 September.
It's actually a bit earlier. It's going to be on the 5th. Is that the 15th? Yeah. Okay, that's right. Yeah.
Yeah. And you can create alerts and stuff. Now, I personally like trading and I like charting and stuff. So I don't really go and investigate into stuff like this. But this is really nice websites. But anyways, okay, let's get to the good news. Okay, so this is the charts. And I was charting Ethereum, USDT dominance as well. And you ask for if there is a divergence. And this is on the 1 hour. You can see we have a hidden bullish divergence. But for me, what is really nice, what I see here, you can show this on the 4 hour. On the 4 hour, you can see we had this divergence there, this bearish divergence, which is really good, because if you have a bearish divergence on USDT, it means because if the price of USDT is going down, it obviously means that people are getting back into the market. Now, we had the divergence there, and that divergence took us below this low. So we were making lower lows. That is really good. And now we went higher. We haven't yet made a high, which is really good. That is super good for me. We do have this hidden bull, but that doesn't mean it has to go and take this thing to the higher levels. It's just the bulls and the bears fighting. So this I see as easily, if you can go open and close below this 28.2, but rather the 38.2, then I'm really sure we're going to see this come here to the 618, 786 area, yeah? And that is really bullish. And this is like a lot of gains actually in the crypto market. So this is really good for me. I'm really bullish about that. The one thing I saw with Bitcoin's dominance is this thing just can't get out of this big time frame channel. I had this line in here for a long time. We broke through. I thought we're never going to see this one again. Guess what? We're back in here. But anyways, let's go further. So thanks for the link. Cool stuff. Okay, so Bitcoin. Here, what I see is, and I think you showed it to us also, here you can see here, this trend line, we've been supporting this trend line for a long time now. And we went to this trend line and we're still hovering above this trend line. We couldn't like close below this. And this is exactly in this reload zone. And the reload zone, it's just the 618786. So you can take that from that low to that high, and sorry if I'm going a bit fast. But yeah, you can see here, we are exactly in this reload zone. So that is really bullish. So if you look at what the USDT is showing, it shows that we have a really great movement that can go to the downside for the USDT, which means people are getting back into the market. And that can easily take us higher again with the crypto space. That is really good, in my opinion. Now, and I'm going to tell this every single time, I still have lower orders. And if you look at this at a bigger scale, yeah, I think it's really necessary to sometimes just look what the market is doing in the bigger time frame. Now, this is on the weekly. And you can see we've been trending down the whole time. Now, yeah, this, if you look at this, you can't really say, okay, now we have to go up. But that doesn't mean we have to come to this level now. The good thing is we've been making higher highs and higher lows all the time. And on the daily, on the daily, you can see we haven't made a lower low yet than that one. You can see we made the lower than that one, but that's like necessary. But you can see we haven't made that low. So that is really good. That's really good in my opinion. And you can see on Ethereum, and this is a channel, we broke through this one. And now let's just go to the smaller time frame, 4 hour. Okay, so we had this bullish divergence here. From there, anyways, there to there, it's a lower lows, and there were higher highs. But now we couldn't, that didn't make us to get that high. We didn't break that high, which isn't so good. But now we're busy forming like a small flag. But yeah, for me, I wouldn't like us to see this low broken, because then that one is super close, really close, and then we don't know how far it's going to go. But if you use a FIP, which I really love, you guys know it, if you take the FIP from that area to that low, you can see there is our 618. If you just use that low. Now it doesn't mean it has to go there. It can make higher highs again. Because if you take the FIP from that high, and instead of that low, you use that low, you can see we are exactly in the 618. Exactly in the 618. And again, with the USDT, this is really, for me, it makes sense to see us making nice movements to the upside now. It just makes sense to me. Okay, and the total market cap, it's quite interesting. A lot of the stuff is in the 618 and 786. The total 2, you can see that 618, 786. Total 3, it went to the 618, 786. So that is really interesting. So if that is good news to you, Stephen, I think that should be good news. But again, I don't think we're going to be in this area for a long time. The retailers everywhere. Retailers, they're getting bored. The market is bad. I know of a lot of people that had to go and get jobs and stuff. It's basically the institutions fighting with each other. And there's a lot of institutions getting back now to the office, and they want to buy crypto, I think, because this is really cheap. So whether they want to buy it cheaper or not, we'll see. But yeah, so just in short, if we see this trend line broken, maybe we can get our buys that I've been waiting for a long time. But that buy is filled. I don't know if there's any questions or anything someone wants to add, but this is in short what I see.
Cool. Thank you, Smith. Are you struggling to stop sharing, or can you stop? You can. Okay.
I found it.
How cool is that? You found the button yourself tonight.
Yeah.
Before we go back to Jason and before we go to Mark, allow me to just set up something with regards to Bitcoin. And I want to say that before we get Jason to go to his charts, because I know he's still got charts to show us. And thank you, Fip Smith, for what you've done there. And you're always positive, but I worry when you say you're positive, because I know where you have those buy orders in. And for you, it will be positive if you hit those buy orders. For most of us, it will be terrible if you hit those buy orders, but that's a matter of semantics. But what I've done is I've taken a screen that I've seen on, that was, I think it was Ed that shared this screen on, or this page on our trading morning call. And I started working on this screen to go make sense of it. And you can see there that I added little blocks and stuff in there, but then it was just not easy enough. So I've gone and I've pulled it apart, and I've gone and I created what I think an easier chart, because I want to see the chart as well as the numbers. I don't just want to see the Bitcoin numbers. Now, this is the Bitcoin chart in TradingView, and the BLX one, the one that gives us a bit more data. So what I've done is that chart that I've showed you, those numbers that I've showed you that we've seen on the morning call that was shared by Ed, I've gone and I worked on them, but I wanted to see it on the chart. For me, I then gone to the charts and I've added those numbers to the chart. So what I've done is I've gone and looked at 2011, 2012, 2013 to 2022. Then I added 2023 for us to add predictions in there, and then 2024. And you'll see later why I added 2024. there in the box, and you can see that I added that after I created it, because I realized that I should have added it from the beginning. But what I've done is I've created this chart, and I've used these lines to indicate a year as they were on the, as they are on the charts. I've indicated and I've added the chart at the bottom. Now, what do I want to do with it? And I'm glad you asked. First thing that I've gone and done on this is I've added the halvings that happened. Remember, we already had 3 halvings in Bitcoin: the 28 November 2012 halving, we had the 9 July 2016 halving, and we had the 11 May 2020 halving. Now, what I've done is I've then gone and I looked at, but what happens during a halving? What happens in a halving? What is the situation in a halving? Jason, I believe that you can see my screen and you can make sense of, or you can at least read what I've put on there.
Yeah, so it took a while, but I can read it now.
Okay, cool. Cool. So the key is, what I've done is I've gone and plotted the halving, and there you can see at the bottom right that I have in there the May 2024 halving. It should be around May. It's not sure yet, but it should be around May. But what I've done is then I added, and I said, but if we have that halving on the 28th of November 2012, let's just go see what Bitcoin has done the subsequent year. And the year after the first halving, Bitcoin has gone up 189%. But this year after, the first year after the halving, and this is where it gets interesting, it grew by 5,400%. Then in Mandla, if it's too small, you just have to hold your cell phone horizontal and you will have a bigger screen. Then the year after the second halving, the 2016 halving, Bitcoin grew 1,300%. Then in the third halving, the May 2020 halving, the year after the halving, Bitcoin only grew 59. But see what happened in the year of the halving. The first halving, Bitcoin in that year grew 189%. The second halving, Bitcoin grew 125%. But in the year of the third halving, Bitcoin grew 304% due to the growth in Bitcoin in that year still of the halving. But then the year after the halving, and this is where it's gone wrong. The year after the halving, 2020-21. 2020, we had COVID. Then we had 2021. And the year after the halving, previous years, it's more than 1,000%, 5,000%, 1,000%. Now for 2021, we only had a 59% growth. And I wanted to see that on the chart. Then if we continue further, we then go look at the second year after the halving. That's always the negative year in the past. The first halving cycle, the second year after the halving, we had a minus 56% growth in Bitcoin. On the second halving, the second year after it, a minus 73% in Bitcoin. And this year so far, with the numbers where we are now, we're sitting on a 49% drop in Bitcoin. And so that tells us that with the halving in 2020, with what happened in the world, although we see that massive spike in the Bitcoin price, it immediately relinquished that again, and we did not get the growth after the halving that we had in the previous year. So what do we want to do? Let's go look at the third year. 34% in the third year, 94% in the third year and the second cycle. And what do we expect for next year in 2023? What do we expect for 2023? If I go look at the previous two, the one was 34 and the other one was 94. So I just guessed the thumbs up 55. That's half of it. And I don't know what it's going to do. What do you think it's going to do? Now, why did I do this? I was busy working on Ethereum to go and see what guidance can we get from Ethereum whenever they worked on Ethereum. And the protocol, because Ethereum is different. It doesn't have the same protocol as Bitcoin. So I've gone and I've taken the Ethereum chart and I've gone and looked at it, and the Constantinople. Now, let me first let me just get out of there for 1 second and not make you seasick while I change my chart. Now, if we go to Ethereum and we go look at the research on Ethereum, and we all know we can go to Wikipedia and we can go and look at Ethereum, but I just want to go to one little area in here. Now I want to go to Ethereum 2.0 because everything with Ethereum's merge for next year, later this year in a month's time roundabout, or just under a month's time, everything is about the merge of Ethereum with the beacon chain, because they created the beacon chain, and the beacon chain has been running since December last year, and we're now going to join or merge with this beacon chain to create Ethereum 2. Now, I will really encourage you to go and look at that, because Ethereum had hard forks before, and the hard fork happened in 2016 when we seen the Ethereum Classic. But the Ethereum Classic hard fork happened because $60 million of Ethereum, which was a substantial amount at that stage, was stolen. And they actually rolled back the blockchain to before that transaction. And that created the rise to Ethereum Classic. And you can go read all that. And that creative rise to Ethereum Classic. And I, for quite some time, said I will never trade in Ethereum Classic, because the guys who actually stole the 60 million of Ethereum supported Ethereum Classic. And lately, I see a lot of people jumping into Ethereum because it was a hard fork of Ethereum into Ethereum Classic to roll back the blockchain to the Ethereum Classic. So I've just had to go look at that, to go learn from that. Then I've gone and I looked at the merge, and I looked at all the official documentation, and I purely put it on the screen to show you where you can find it. And this is a website called ethereum.org. Ethereum.org. Let me just do a FibSmith and put that in the chat box for you. Otherwise, you're going to tell me you get better service from FibSmith than from me. So thank you, FibSmith, for putting that pressure on me. And yeah, you can go read the story about the merge. And if you go into here to learn, you can actually go and see what it's all about. And it's all about the energy consumption of Ethereum. That's why they want to go to a proof of stake. Proof of stake and not a proof of work. And you can go read there everything about the merge of the beacon chain. And it's actually very easy reading. I just want to encourage you and show you where you can go and find it. Then the last thing I want to channel you to before I continue with my chart, and that is the consensus.net, consensus discussions on Ethereum 2. And there again, you can go read everything with the roadmap, which I'm not going to do tonight. But the last thing I want to say about Ethereum is every time they talk about Ethereum going to a proof of stake, we see this coin, Ethereum Classic, doing massive rallies. And last year in April, they started the discussions because Ethereum was supposed to be upgraded last year already. Well, it's the last 4 years been postponed all the time. But last year in April, they started really talking about Ethereum going to proof of stake. And the miners of Ethereum then said, but we need to go mine something else. And one of the alternatives was Ethereum Classic. Hence the fact that Ethereum Classic had a massive spike in March last year, as high as 1,900% in 40 days, 1,900% in 40 days. And since then, every time that they say something about Ethereum Classic again, you see the price rise. And in March this year, the same happened where they discussed the miners going to Ethereum Classic, and there was a big rally again. And so we just need to take cognizance of that if we want to go look forward. But my research has taken me to come and show you the following, and let me just get my charts ready so that I don't make you seasick. So what I've done is I've gone and looked and see, okay, but in Bitcoin, we have the halvings, and we have this massive influence on price after the halvings. And we see the first one and the second one closely resembled the same trend, the first, second, and third year after the halving. But this time we had a significant change from what happened the previous 2 times in the Bitcoin halving, which is, I think, important for us going forward, because that shows us something with regards to Bitcoin. So what I've done is in Ethereum, I've purely gone and I looked at every time that they upgraded or updated the Ethereum blockchain, and I looked at that and said, but is there a significant jump in price? And I could definitely not find any significance in going forward in telling me, but I have to go check and see when they update the Ethereum blockchain, where there is something, whether it's a positive or negative. And I've gone, after I've done that, I've seen that the Bitcoin price, the stock exchange that influenced the Bitcoin price, and the Bitcoin price has got more influence on the Ethereum price than any of the upgrades to the Ethereum blockchain. So we cannot go and say, but the Ethereum blockchain, we can go that this year that happened in December 2012, Ethereum lost a significant percentage, something like 43% in that month. And if you go look at it, it was Bitcoin that was doing that. It's got nothing to do with the upgrade on the Ethereum blockchain. The Grey Glacier was the last one on there. So what do we say if we go look at what the markets say? What do we say what will happen with this merge of Ethereum onto the Beacon chain, so that the Beacon chain and the Ethereum chain merge, so that it become one, so that it's easier for people to develop on Ethereum, and it's a lot less energy draining or hard on tough on energy for Ethereum. If I go look at what the markets say, a lot of people say we will first go down and then we will go up. Now, we've heard on the morning call, everyone say all the time, you buy the news, but you sell the event. The event is happening on the 14th, 13th, 14th, 15th of September. If we say you buy the news, but you sell the event, we should start putting our things in place to say, when are we going to sell? Because the consensus, or most of the people in the market, say it's first going to go down, but then it's going to go up. But there is people in the market saying that I've added to that yellow line. There are people saying the target after the merge is 2,800. After it retraced a little, is about 2,800. But then there's the same significant number of people that say, but the target is actually 4,400, with people talking about $12,000 as well for Ethereum, which I have seen, but it's not big numbers. So there's a group of people saying the target for Ethereum will be about 2.8, and a group of them saying, a big group saying 4.4. I don't know what my fellow presenters tonight have seen or heard about this. If I just grab my mouse here, I'll get out of this, stop sharing that. And I trust that, I don't know if you're as confused as I am, or that you think that it actually helped. But looking at the Bitcoin halvings and what the halvings of Bitcoin has done, has influenced the Ethereum price more than what the previous updates on the Ethereum blockchain has done. This is a significant merge with the Beacon chain. It is a significant merge. It's not just something small, and it will make Ethereum 96% or 98% energy efficient, which means it will use very little energy compared to what it's using currently. And there might be people that like that, but apparently the Beacon chain will allow many developers to develop on the Ethereum chain on alternative side chains to the Ethereum chain, and not directly on the Ethereum chain in the same blocks. And apparently that will have Ethereum going crazy. And that's why we have a lot of people that's into Ethereum. So on that note, Jason, I don't know if you would like to just say, forget all that, continue, or if you would like to add something to that.
No, well done, Donnie. That was great. If we have a look at the chart once again, and Smith alluded to it, that the Dow on the Fear and Greed Index is sitting at 29, it's in fear. And the retail are definitely not in this party at the moment. The majority of retail not in this party. And just remember that the whales have to sell to the retail. So the question is, Donnie asked the question, are we going down, are we going up? Nobody's got a crystal ball, but if we just look at resistance areas to the upside, but before we get there, we can just see where we've come from. So we were down at a low here on the 18th of June at 884. Can you believe it? $884. And from there, we moved right up to last week, up to 2,000. So that is quite a significant move from that low over the space of 2 months, 120%. And we're in this, as I said, the rising sort of wedge formation. We've broken to the downside. And now it looks like we're coming down to possibly retest this important 1,500 level. And you can see 1,500 is a strong support area. I would imagine you go back into history, 1.5 is very strong support. It doesn't mean that we're going to stop there. We could even go lower than that. But if we look to the upside, we're in now possibly going to go form a falling wedge. And with a falling wedge, that's normally bullish and is a massive chance, well, 68% chance that we break to the upside. So if we do move to the upside, we have got this major resistance area here. There's quite a big resistance area in between 2.3 and 2.5. The first one is I'm going to focus on this outer white line that comes all the way from November last year, from the 10th of November, that's been resistance, and that will be very strong resistance to the upside. And if we look into history here, you can see this block between 2.3 and 2.5 has been previously strong support, and we do have liquidity here to the upside here. These candles haven't been tested. This 2.3 hasn't been tested to the upside when we dropped here in May. So I would imagine that we would go back up into this area. And just remember, Donnie alluded that it's buy the rumor and sell the news. So the whales have already bought here in June this year, down the bottom here, $1,000, and they will want to sell out here once we get closer, I would imagine, up into this level here. So my view, Donnie, and it's only crystal ball, really means nothing, is that we possibly only going to go up to between 2.2 and possibly 2.4 maximum to the upside here. The Ethereum Bitcoin chart, we have moved up over the same period as a ratio from, let me go into higher time frames here. We have come from a 0.05 level right up to a resistance here at 0.08. And we got rejected there, and we have started breaking down to the downside. So I would imagine that we need to come retest that level again. So I would imagine we will come back up to 0.08 again. Might even spike through there to retest that line, then possibly rejection, move down from it. So yeah, Donnie, I'll see between sort of 2.3 and 2.4, maybe even 2.5. And I would imagine that the whales are going to sell off there. So if we focus on what it looked like when a whale sells, and I think we have got some wicks here, the long wick theory, but if we have a look at Bitcoin, what happened last week, and we need to go into the 4-hour here. Last week, when the whales are selling off, what happens with the candle, it goes up, and you'll see that it gets pushed down again. And the body of the candle's below the 50% level to the downside. And this is whales that are selling off into retail that are pushing price up. So all of these are whales selling off. You can see the long wicks to the upside. So I would imagine that we're going to see the same thing in Ethereum when we get closer to the event next month. So we need to look out for these type of long wicks again. And when you see that, gives you a clue that we are right at the top. And one needs to get out when the whales get out. Don't get tricked into what these whales do. They push price up on purpose in order to sell into your greed. So we need to be looking out for that. As far as the dominance is concerned, if we go on to the monthly, maybe the weekly, we've got a massive cup and handle, and that goes right back to 2018 where we formed this cup. We've got a handle that's coming down, and the resistance here is at 20% dominance of the total market cap. So if you take the market cap of Ethereum, it was last week 20% of the total. And we have got rejected there, unfortunately, again, and we're coming down. So we might come down and retest this line, this white line. hopefully start moving up from there back up again and get through this 20%. So yeah, to answer your question, Johnny, I don't know how we're going to go, but I don't think it's too high. And the reason why I don't think it's too high is because of this. I don't see too much retail in this market at the moment that's actually going to push this price up. And at the same time, the whales are wanting to sell out.
Cool. Thank you, Jason. And that's exactly why I showed everybody where to go find the research and where to go read up on it so that you can do your own research and go read up a little and go find it. I've truly gone and looked at the Bitcoin halvings to see if I can find a similar trend in Ethereum for whenever they have upgrades to the Ethereum blockchain. But I promise you there was none of that. The Bitcoin price has got a better indication of what will happen to Ethereum than what the upgrades in the Ethereum blockchain has had in the past. And because I tried to go look at all those different upgrades to see if I can find some resemblance in there or something that will indicate what will happen now, and I could not. And the two schools of thought, the two around about 2,200 and 4,400, but then we have those outliers which we always have, and that's $12,000, and I think that's just someone hoping for someone to go and jump into it for them to make money. But on that note, let's go to Marius, the wealth coach, and Marius is busy with his trading course, and he's taken a little bit of a vacation off that, but he assured me that he's now back on it fully, and he learned something, and he would like to say something about that tonight. Thank you, Marius.
Yes, Daniel, thank you. Yes, luckily we've got more technical guys, Jason and Phip Smith on the call. But yeah, I took that ultimate training course a while ago. It was an ongoing thing. And I actually just left it a while till the modules stacked up. And what I did is that the first modules was 6 hours of trading view. And now we are on support and resistance lines. And I told Donnie, the kind of detail that I get out of this is absolutely great. They really spent an hour or 2 hours per chapter that gives us a great content. And what I also love about this course that I took out is this nifty indicator that I still go and must have a look at on TradingView, and they call it the detonator. And I must really go and look exactly how it works. But you can see every time we've got a green dot here at the bottom, there's some growth, anything between 6 or 20%. Let's see how it goes. There's a whole chapter to explain exactly how this detonator A and B looks and what every symbol is for. But yeah, I love these kind of indicators just to make my job easier. And I believe it is the right time to start accumulating some profits again. So yeah, thank you.
Thank you, Marius. We appreciate that. And with that, our time's up. So let's go to Phip Smith and then to Jason for last words, wrap up on this evening. Jason, Phip Smith, what will you say as last words for this evening?
Yeah, just quickly regarding what I see with ETH and stuff like this in the market. I personally, and I think Jason can probably speak for himself with this and maybe say it with me. But what I see is usually when stuff happens in the market, the chart is telling you what's the stuff going to happen and how far it's going to go and stuff like that. So it's just the probabilities that we have. And usually what happens with the news is just an excuse. And the thing is with crypto, it's hard to predict because usually what happens is people buy the news and sell the event. But sometimes I've seen the opposite happens because everybody thinks the same thing the whole time. But anyways, I also see Ethereum going to 2,500. That is because that is a 618, the smaller time frame 618. And then I'm not going to show much chart. And the bigger time frame 618 is at 3,300. But I don't think we're going to see that one now. I think that 2,500 one is the more probable one if we're going to see that one now. So yeah, guys, yeah, as always, yeah, enjoy and keep your mindset right and enjoy. Trading is fun. It should be fun. And I know it's hard here where we are now, because if you are here, then kudos to you, because a lot of people left and it's scary because they don't know about risk management. Cool.
Cool. Thank you, Philip Smith. Dankie, Andre. Jason, last words from you, buddy.
Yeah, thanks. The current market that we got really is a trader's market. I've showed you where a lot of traders are buying at the bottom, selling at the top, and just rinsing and repeat. But Donnie, you spoke around the drops in Bitcoin, and I think that we still got a long way to go down to the bottom. I wouldn't say a long way, but we still got a bit of way to go to the bottom. And I think next week we can just talk about it. And I think crypto is in a bubble, not because of price, but because of the amount of projects out there. But just look at coin market cap, for example, there's 20,689 coins on CoinMaker. That is way, way too much. And the majority of those projects, unfortunately, are not going to make it, and they're going to get flushed out. So I think we are in the bubble, and that bubble has to get rid of those projects, pretty much like a .com bubble in the year 2000. And I think next week, this time, we can spend a bit of time around there and just reflect on what happened in 2000, and then try to apply the same science to what crypto and what we should be expecting to see from Bitcoin in the next year or so. But anyway, everybody enjoy your evening.
Cool. Thank you, Jason. And you tolerated no electricity for this afternoon and still you're on the call. We appreciate that. And thank you for that guiding light beacon for us for next week. We will really pursue that and go look at that. And ladies and gentlemen, thank you. Thank you to everyone that presented, everyone that's been on the call. We appreciate you. Without you, we couldn't do it. We trust that you'll have an amazing evening. Have a good one. It was a privilege serving you. Goodbye. Cheers.